Good morning, traders. Welcome to a brand new month and the first trading session of March. Last month ended with a battle between buyers and sellers, and now, with fresh capital hitting the market, we're about to see where the big players want to take ES next. Will bulls hold Friday's strong close and push higher? Or was this just a setup for another rug pull? So before we jump into the charts, here's what's on the radar today. We have the ISM Manufacturing Index, that is key economic data that could shake things up a little bit. It's a new month, so fresh order flow. Expect some volatility as big players position themselves for March. And of course, all eyes on whether Friday's push higher was the real deal or just another fake out. Let's dive in. The 10-day volume profile is showing that the market is heavily balancing with this POC at 5,966. Value area has shifted downwards, now a massive 165 point range right here between 6,068 and 5,903. This signals a broad distribution and major two-sided participation. Price is stuck inside this balance zone, waiting for exception or rejection, and a breakout might be coming. Let's look at the weekly and daily structure. So we see that March opened up inside of last week's value area and around the POC at 5,966 after Friday's rally from the 5,848 low. So key breakout levels to watch are going to be this 6,042.75 value area high and of course the 5,935 value area low, which is the bearish trigger. We can expect price to test these boundaries earlier on this week. Now, if we look at the fun chart, the 2-hour delta chart, then we see that buyers held above this 5,861 buy level very aggressively and drove ES back to the weekly VWAP into the close. Sellers tried to take out this 5,843 level, but they failed, and this triggered this strong reversal into this 5,960 area. Now the question remains, was this just end of the month positioning or are bulls actually taking back control? Friday's New York session tried to accept lower prices to continue the downtrend, but buyers pushed back into Thursday value. This left a massive 33-point single print spike from 5,953 to 5,920. One of our main jobs today is to see if this structure gets accepted or if sellers will clean it up. And finally, we jump into the 1-hour chart that shows ES holding above February's close and January's open, consolidating around the POC at 5,966. Strike prices today are extremely wide, with a high of 6,200 and a low of 5,740. But the midpoint, the 50% line, aligns with our 5,966 at 5,970. So this is the key balance zone. Whoever controls it today will set the tone for the rest of the week. Now my line in the sand today is this 5,970. So above this 5,970, my longs will open at the February's open 5,983, targeting the 6,000 level, 6,015 level, and the low volume node 6023. Below this line in the sand, shorts will trigger from the single print high, targeting 5920, 5910, and 5890. So guys, it's the first Monday of the month, and that means big players are repositioning, fresh orders are coming in, and volatility is on the table. If bulls can hold this value area, we could see a strong start into March. But if sellers reclaim control and break below 5,953, expect a cleanup of Friday's move. This is a critical inflection point, so we have to stay disciplined, watch key levels, and let the market show its hand. As always, hit this notification bell and follow for daily and weekly updates. You don't want to miss what happens next.